we added 2.5 million jobs. I want to repeat that. Added jobs, and unemployment fell from 14.7% to 13.3%. Just to remind everyone exactly what we were expecting. We were expecting 8 million in losses and that employment rate number to shoot up to just under 20%, to 19.5%. And that's pretty interesting considering some of the data that we got a little bit earlier in the week. According to ADP, private payrolls fell by 2.76 million in May. That number, of course, was a bit of good news. We had expected just under 9 million in losses, but still some divergence going on there. Now, to dig into that jobs report just a little bit for a second here, employment in leisure and hospitality increased by 1.2 million. Hiring in restaurants and bars rose by 1.4 million, and retail rose by 370,000. Now, on the flip side, in terms of those job losses, air transportation lost roughly 50,000 jobs. And as I said, the market's absolutely loving what they heard this morning. Right now, the Dow is the leader, up about 3.5%. Pairing some of the gains a little bit earlier, we were up almost nearly 1,000 points. It's now about 900 points. S&P 500, the next greatest gainer on the day there, we're roughly sticking at up 3%. Tech, all in the green today, as we're seeing across the board. Microsoft up almost 2%, Facebook almost up 2% as well, and Boeing for the Dow giving a nice lift there, up about 12.5%. So to talk about this jobs report and what the markets are doing today, I want to bring in Michelle Girard, Managing Director and Chief U.S. Economist at NatWest Markets. Michelle, thank you so much for joining us. I want to ask you first on just your quick, immediate reaction on the report that we got this morning.
Well, I'm encouraged that we saw a bounce. I'm not shocked. You lose 20 million jobs in April. It isn't surprising, actually, that you would see a bounce. We had said coming into this, anything plus or minus 5 million, quite honestly, in these unprecedented times, wouldn't surprise me. So it's good news in that it does suggest that the worst of the economic hit will be contained in the month of April, where the May data do show some improvement. And of course, hopefully, as the economy continues to reopen, the numbers will look better going forward, even better going forward.
So, Michelle, I feel like I hear slight hints of pragmatism in how you're looking at this report. I want to get to that in just one second. But I think I have to ask you about this divergence that we are seeing in data between what we are seeing today, this addition of jobs. How do you square that with what we got just a couple of days ago out of the ADP report?
The correlation between the ADP numbers and the BLS released employment statistics is never all that close. Oftentimes in the old days, if payrolls were up 200,000, ADP could be anywhere from 50 to 75,000, let's just say, off of that number. And the point is that when you're talking about millions, the magnitude of the the misses, if you will, or the discrepancy between the two is just amplified. So in this crazy time where all of the statistics themselves are noisy, the fact that you have methodological differences, the fact that the ADP numbers look at people who are on payrolls not getting paid. I mean, quite honestly, that would have said if anything, ADP would be stronger. But nonetheless, any of the methodological differences get amplified. And so I just think with all of these numbers, you just have to keep in mind these are unprecedented times, and all of the data have to be taken with a little bit of a grain of salt.
All right. So to that point, taking things with a grain of salt, I mean, what are you seeing in the next couple of months? It doesn't seem like you are completely jumping up and down for joy. So what are the hurdles that we have coming down the pike?
Well, I do think that we are going to see better numbers in June. If you look at the employment stats, out of the number of unemployed, you still have over 70% who expect to be called back to work in the next 6 months. They're classified as on temporary layoff. If that's true, and all of those workers do get rehired in the coming months, then you'd be talking about, rebound of maybe 15 million jobs that, are added back to the economy, again, between now and let's say the end of the third quarter. So I do think as the economies reopen, you'll get a bounce. The problem is it's that last, let's say 5 million, if you will, of those who have lost their jobs that I think are going to be, that's really where the slog, the hard, difficult work has to get done. Even when we see the bulk of the workers that have been unemployed rehired, you're still going to be looking at a large amount of individuals who are going to still be unemployed. You're still going to be looking at an unemployment rate that I think will be in excess of 7, perhaps even 8% at the end of the year. And that's what I mean. I'm encouraged that for most, perhaps the COVID-19 economic hit in terms of employment will prove short-lived, but there's going to be a good number of individuals who are going to be affected for a longer period of time.
So Michelle, quickly before we let you go, I want you to take a listen to what the president was saying a little bit earlier today about the recovery.
We were able to cut it off, stop it, just like this. Stop it. Keep everyone inside, keep them away, keep them together, away, uninfected. And we saved millions of lives. And now we're opening, and we're opening with a bang. And we've been talking about the V. This is better than a V. This is a rocket ship. This is far better than a V.
So is it better than a V? Is it a rocket ship, Michelle?
Well, it's going to feel like that, I think, in the near term, because I do think you are going to see a relatively sharp bounce, if only because the magnitude of the fall was just so horrific. It's sort of like the harder you fall, the higher the bounce. So we will get a sharp bounce. It's just, as I keep saying, it's that, will you actually get all the way back? So you have a true V in the next couple of months. I'm just a little bit skeptical of that. I think we can get 60 or 70% of the way there, but it's going to be that last, 20 to 30% where I think you're going to be seeing the scars, if you will, the longer lasting scars from COVID that linger.
All right. Well, we'll have to leave that conversation there. Michelle Girard from NatWest Markets. Thanks so much.